Good afternoon. Climate change remains the biggest threat to humanity today. And we are watching this tragedy unfold on a global scale, where our common pool resources, like the atmosphere, is now being pushed against their boundaries to sustain us. Carbon emissions continue to rise, and it's perhaps the result of our economic system's greatest market failure. Its inability to correctly assign value to the ecological foundations we require to build a thriving civilization. My name is Johan Pretorius. Good afternoon. And I'm the founder of the Carbon Reserve and sponsor of the Toco project. And I'm here, I guess, to deliver a simple message, is that I think inherently it is possible to fix our economic system in order to protect our common pool resources today, and that we can beat and win this fight against climate change. We can create a safe and just and prosperous economy that both promotes human well-being but also respects the limits of our planet. And that is why we created Toco, because we fundamentally believe we're going to need better money to create a better world. And let me start here at the outset to say that I believe that economic ambition and activity is not inherently bad. It's created a host of positive outcomes, but these benefits since the Industrial Revolution, as our technology has advanced, has increasingly come at a cost to the environment that our economy just simply has an inability to account for. Carbon emissions continue to rise. These unpriced outcomes, such as carbon emissions and the resultant climate change, are what economists call negative externalities. And we have thrown over the last 3 decades every trick that we have in our bag at it. We've tried carbon taxes, we've tried cap and trade systems, we have tried regulations, we've tried legal frameworks. And at every single objective measure, if we look at it, it has been a dismal failure. We are 28 COPs in, and annual emissions are up by 60%. Our carbon markets are a joke. They're fragmented, they're illiquid, they're opaque, they're soiled with credibility concerns. They're far too small and the pricing far too soft to sort of incentivize the kind of mitigation investments we are going to need to make an impact. Why have they failed? I think it's an indictment on our government and on our institutions. They've had 3 decades since Kyoto, and since then, they have not found the consensus in terms of how these markets should operate, and I don't think that they are going to. There's just simply too many competing interests and sovereign concerns and skewed vulnerabilities involved to find the agreements and the cooperation that we're going to need to create effective carbon pricing schemes. We're going to need something completely different, a different way of thinking about it. And I think that what we need is a people-driven solution, a community-driven solution, one that makes it possible for every person, every business, whether small or large or corporate, every economic actor that we have in our economy, to make climate impact and do so in an easy and affordable manner. We are going to have to move beyond this idea that we can only create demand for carbon mitigation through compliance or ethical considerations. What we need is an actual substantial use case, something that has everyday utility for every economic actor in our economic system, that has true value. And we're going to have to find an economic system whereby we can update our economics, if you will, which really sort of prioritizes private goals at the exclusion of the environment, into a new kind of economics, which, for the lack of a better term, excuse the term commonomics, takes the environment and makes it inherent in the economy and creates deep links between achieving economic ambitions and protecting the planet. We think this is actually quite easy to achieve. We think that a carbon currency is a way to solve this, a new monetary framework where the basis of the money supply is based on carbon mitigation outcomes. a currency backed by carbon mitigation outcomes such as carbon credits or carbon offsets, allowances, any of the carbon mitigation assets out there, derives its intrinsic value from environmental stewardship, from real-world environmental impact. And if you base a currency on carbon, you are creating a deep link between the economic incentives that drive the economy to expand and investment in activities that promote sustainability. And I'll explain what I mean by that. As the economy grows, so does the value in the economy. In order to represent that value in the economy, so does the money supply. If the money supply is linked to carbon mitigation, any economic activity or growth in the economy therefore directly transmits a demand signal to the carbon markets and for more carbon mitigation activities. Instead of mining gold like we did up until the 1971s when we were under the gold standard to support our money supply, why don't we start investing in more carbon mining activities and base our currency on the back of carbon reductions, carbon avoidances, and carbon mitigation? And when you start to think about a carbon mitigation offset, like a carbon mitigation outcome, like a carbon credit or a carbon allowance or carbon offset, the properties of carbon mitigation outcomes are in fact very similar to that of gold. Expensive to produce, right? There's a natural scarcity in terms of the amount of carbon dioxide that's available. Supply is fairly inelastic because these projects are complex and take quite a long time to do. And they have no other sort of real-world application, similar to gold as well. And this is exactly the properties that you need for something to be a reliable store of value. You need predictable supply, and you need predictable demand. And we think that if you take this kind of perspective, you start creating a system that really has positive outcomes for the environment at large, because you take environmental sustainable investments and activities and you're embedding that in the financial system. In a carbon-based economy or carbon-based monetary system, the market should be inherently incentivized to lower their carbon footprint simply to keep the money supply stable. Your businesses and individuals should invest in sustainable activities because in this framework, any carbon mitigation outcome that is achieved becomes a real and legitimate source of revenue. And we think that it provides kind of an interesting perspective in terms of how we might consider our natural resources that act as carbon sinks today, our precious forests and so forth. Because in a monetary framework where the money supply is based on carbon mitigation, these forests now become income-yielding assets as opposed to simple input costs. And this gives the owners of these natural resources suddenly an alternative means to exploit them economically that is far more planet positive. How would one achieve this? Well, the easy answer is get the central banks to do it. How might they do it? Very simply. They might create some kind of reserve mechanism where at least a portion of today's fiat monetary supply is linked to carbon mitigation outcomes, and they could buy carbon allowances and carbon credits and house that on their balance sheet and regulate the money supply in such a way that they balance economic ambitions with environmental goals. More controversially, perhaps, they could set certain minimum reserve requirements for commercial banks, and that will cause them to channel capital into sustainability activities so that they can continue their loan writing activities. However, I think that that's probably beset by the same sort of collective action dilemma problems that we had in the carbon markets in the first place. For the world financial community and the central banks to get agreement, that's not going to happen. So at Toco, what we've been doing for the last 2 years is we've been trying to create the infrastructure that would power an independent global currency that's 100% backed by carbon mitigation assets, that allows people everywhere in the world to take climate action in an easy and affordable manner as part of their daily lives. by using it as money for buying a coffee, for buying your groceries, for doing your shopping. Because as we expand this money supply that is based on carbon mitigation assets, we create massive sources of demand for the markets, because we harness your current money needs to transmit demand to the carbon markets. So how does Toco work? In the Toco standard, let's call it the carbon standard, our carbon standard, each unit of currency is called a Toco. We started calling it a Toco. It's really just an abbreviation for 1 ton of OCO. The chemists in the room might recognize that as the molecular formula for carbon, but yeah, we've sort of shortened it to Toco. Each unit of the currency represents 1 ton of carbon mitigation achieved, 1 ton of CO2 equivalent mitigation achieved. And the currency in circulation is completely backed by a portfolio of carbon mitigation assets. These carbon mitigation assets are the ones that you know, the tradable certificates that are either carbon offsets or carbon credits or carbon reductions or carbon avoidances. We take this portfolio and it's put in the custody of the Carbon Reserve, who I'm representing here today, which is a non-profit foundation that was created in Switzerland, Geneva. And the Carbon Reserve acts as a kind of monetary authority for the financial system or the carbon economy. Its main role is to ensure that it maintains the convertibility of the Toco into the underlying, and to expand its balance sheet, which is an expansion of carbon mitigation, responsibly. It acts in an analogous manner to what central banks do today and how they intervene in the financial system. It issues the Toco. It will also buy the Toco off the market. It actively manages the portfolio of carbon mitigation assets to deal with risks, and it leverages its balance sheet to provide stability and liquidity to the system. In order to create worldwide adoption, and to do so easily, we've also created a separate payment system for it that can be deployed anywhere that there is an internet connection. You access it with an app via the app stores, either Google or Apple. This allows you to exchange your local currency for Tocos, and then you can go and use those Tocos with participating merchants or people in the partner merchant network who accepts it and pay for your goods and services. And the more you channel your money needs away from the competing currency, which is fiat, which is based on debt expansion, government's debt expansion, towards this currency, we give you the ability to allocate your money needs to environmental goals and balance that with your economic ambitions. The payment system has been built to be really quick and fast and mobile capable, can roll out anywhere, and it makes access for merchants and for users relatively easy. So in February of last year, we developed all of this infrastructure, and we decided to test it to see what it would look like in a real world application. And we took it to a small town in South Africa called Stellenbosch. It's where I'm from originally. It's about 40 km north of Cape Town, wine growing region, student population. There's about 30,000 inhabitants in what we call sort of the addressable market for this application. And we rolled it out there to see, right, what would happen. And the results are now in, and really the results are actually quite astounding. User adoption was fantastic. We created user growth of 65% month on month. Within 7 months of launching the currency there, we had up to 30% of the addressable market using the currency habitually every day, transacting, buying coffee, buying food, going to bars, having your hair cut, going to florists, a whole host of merchants who were taking the currency. And the reason that we did so well, I think, is that the feedback from everyone who was using it was very consistent. And that is that, listen, I'm frustrated. I want to do something about climate action, but how do I do this? There's just too much friction for me to accomplish anything. What this gives people is the means to have positive climate impact, have positive impact on expanding decarbonization activities by simply continuing with their everyday economic activity and being a participant in the economy, just by changing the type of money that they use, a better money, a more moral money. The other thing that we found is that people, even with all of this pent-up frustration, the other thing that they have is, yeah, but I might be doing something. I'm recycling every day, and I'm trying to do this, and I'm taking trains, but that's me. What's interesting about creating a payment ecosystem such as this is it naturally creates a community. You can start seeing people are starting to use Toco to express positive climate action around you. You can see the network of merchants growing, and who feel part of people feel part of a community, and they feel that they are collectively driving a purpose. On the merchant side, it was interesting as well. I think the initial merchants that came onto the system was there for economic benefit, because the transactional system, payment system, is very, very low fees. But very soon they realized that they could create a connection, a deeper brand connection with their customers, that by accepting a currency backed by carbon, they could signal their credentials. And you started seeing that in the market. People who were using Toco were searching for merchants to buy their coffee at a merchant that would accept it, because yes, I need to buy the coffee, but I can buy the coffee and do a little bit of good. And of course, that then created incentivized for the merchants who weren't adopting it right at the start, because they were actually losing customers. And so we had the merchants densify, created more utility in the network. As we had more utility for individuals, we had another wave of individuals on board. That stimulated the market, and we got this flywheel and network effect going very, very, very successfully, to such an extent that the carbon reserve, as this currency was going into circulation and it started growing and growing, and the value chain deepened, we had suppliers starting to accept Toco. We even had people who were prepared to take some of their salary in Toco. We had landlords eventually accepting rent in Toco within the Stellenbosch community. And so the Toco circulation just kept growing and increasing, to such an extent that the carbon reserve, who initially thought, listen, we'll just go and buy carbon credits off the market locally in South Africa. People like to know where it is and we can see it. But within 4 months, we had run out of credible carbon credits in the South African market, and we had to pivot offshore to go and buy credits there, because that is the amount of demand that economic activity can actually transmit to the carbon markets. For every user that we onboarded, they transmitted 2 tons of carbon mitigation demand every month. And that is an incredible lever for us to potentially harness. And following the pilot, we'd obviously come to the conclusion that, look, if you can do it in a small community in Stellenbosch and have this kind of impact, imagine if several communities got together and did it. Imagine if we got a city and people in cities to adopt it. And for that reason, after we've tested the concept, we have now decided to leave the experimental box and launch the payment system and make the currency available. We will be live in Switzerland. You'll be able to download the app by next week. Makes possible for people to buy Tocos. We're busy developing in parallel a merchant network in Switzerland, where you'll be able to obviously use the currency. We're going to Denmark in April. And then we hope to be available in Europe and the rest of Europe before the end of the year, around August. We're just waiting for some regulatory approvals to operate the payment system there. I think the one thing that we've realized is that if you just imagine every gainfully employed person in Europe right now were to buy 1 cup of coffee a day with a currency backed by carbon, you would need 30 billion euros of currency to represent that. That would translate 30 billion euros of demand directly to the carbon markets. And that is 15 times the size of what the voluntary carbon market is today. And that is as simple as just asking people to buy 1 cup of coffee with a currency that is backed by carbon. So we'll be rolling that out, supporting the currency where we can, and obviously invite everybody in those countries where it's available to please join and speak to their friends and get them to join. Speak to your local merchants out there, get them to sign up. You know, every little helps. But I want to leave you with this thought, is that I think we truly do have the opportunity to, as people, reach across our boundaries and unite around a shared value, and that is that carbon mitigation and climate impact has intrinsic value. And we can demonstrate our commitment to that belief by using it as money, as a means to exchange value amongst ourselves. I truly believe that we can build a safe, just, and prosperous economy that promotes human well-being while respecting the limitations of our planet. All that it requires of us is the moral courage to reimagine the nature of money. I think the time has come for us to put our money where our mouths are, and that's behind decarbonization. Thank you. I'm happy to take any questions if there are any. Yes, please.
So, I mean, what happens next? So everybody in Switzerland goes and buys a cup of coffee every day. I mean, well, you know, say this, assume this is successful as it has been in Stellenbosch. What happens? So everybody's transacting in Toco.
Yeah, so
there's a huge amount of money goes into the carbon credit market. It pushes the price of carbon.
It pushes the prices of carbon up, which means we go up the supply curve. It means that, you know, technology and projects that weren't fundable previously because the pricing was too low suddenly gets into reach. I see it very analogous to the way that the gold mining industry going. If you look at the carbon markets today, we are essentially still panning for gold. That's the level that we have achieved. But by creating the demand and pushing that demand into a scarce supply that exists today, you will push that price up, and that will incentivize further projects into decarbonization and establish higher prices for carbon, which will also be obviously positive for the users.
But there's a fundamental difference between the gold standard and a carbon standard. Because when you have a gold standard, you've got a fixed exchange rate. With a carbon standard, you don't have that fixed exchange rate. So it becomes a tool for speculation. Is that, I mean, that...
Sure.
I love the idea. I'm just trying to understand.
So that's exactly why. So to answer that question, that's exactly why we created the carbon reserve as a monetary authority, and acting as a monetary authority, but with flexible monetary policy. So what the carbon reserve does is it leverages its balance sheet to try and dampen the volatility of the carbon markets. So let's say the underlying carbon prices would fall. The carbon reserve would still purchase the currency that is being exchanged back for fiat at levels that it tries to support. Exactly the same way that a central bank might defend its local currency against a foreign currency exchange by using its reserves to try and defend that currency. You can obviously only do that until, you know, a certain point on the balance sheet. But that is the idea, is to use the carbon reserve as a sort of central pooling of risk, and leverage its balance sheet to provide that stability and dampen some of that underlying volatility. Of course, the volatility inherent in the carbon markets today also really has to do with like the huge spreads that are out there, the fact that, you know, the assets are usually heterogeneous. And we actually think that by providing a service to the market where you pool all of these mitigation assets into a single portfolio, and you then issue a unit of currency, you make carbon more fungible, and you'll be able to reduce the spread, especially if you add a little bit more of liquidity to the system.
And how much capital does the carbon reserve have?
The carbon reserve at the moment has been capitalized with around $5 to $6 million. We're starting We're starting fairly small. The way that we go to market is we target communities where we can create utilities, so it won't be one big bang rollout. We'll go to various towns, work with communities there, get adoption, and start building it sort of community by community until you can sort of prove to people that there's an example and you build trust in the system. We are not naive here to think that you're just going to roll out a private currency and have trust day one. You're going to have to layer this, and you're going to have to prove to the market that you're fulfilling on the promise that you made.
And Stellenbosch is still live, is it still?
No, we have closed Stellenbosch down in October last year because what happened was South Africa, my dear country, got grey listed, and because the payment system is regulated under Switzerland, that just posed way too much risk and would require so much enhanced due diligence on the underlying accounts that we decided rather to close it down so that we don't embed that risk and pivot immediately into Europe.
And so what? I mean, if I had an app and I'm sitting in Stellenbosch and it's closed down, I just get my money back?
Yes, we unwound the position and we refunded everyone back into fiat.
Can we have one more question?
Sure.
Thanks. I'm just curious to know, kind of, I guess you touched on it there, the biggest challenges you're facing in scaling this up.
I think the biggest challenge that we face is probably the underlying carbon markets and where they are at the moment. As I said, riddled with some credibility concerns, big spreads, and it's the ability, I think, to transition this slowly and leverage the current carbon markets, but be able to maintain a legitimacy and trust with the users, because there are going to be crises in the carbon markets as we've seen. The idea of the carbon reserve is that by pooling all of those into a balance sheet, it is able to ride those risks on behalf of its participants. So I think that's the big challenge for us.
I'm sorry, I'm not sure if you said that in the beginning, but I couldn't make it, and I have just this curiosity. How do you guarantee the high-level integrity of the credits that are in the very first beginning of everything? Yeah,
so the way that we do it, the way that we think about it is to treat it a little bit more like, we treat something like debt today. So the carbon reserve it buys a whole portfolio of carbon assets. So it pools all of those quality risks that sit on an individual level. So if one asset's credibility or quality turns out not to be what you would be expected, it's not like the whole system is damaged. There's a small credibility crisis, but because it's part of a portfolio, it doesn't affect the claim to the user that much. And then the second thing that we do is we take a risk-adjusted approach to the carbon assets that we bring into the portfolio. So we think of carbon assets not as good assets and bad assets. We think of them as a range of mitigation outcomes. And so we risk rate them. We would take certain projects, look at them, look at where they're from. Is it technology? What is the permanence? What is the double counting risks, the fraud risk? Which countries and schemes do they come from? And some of them we might rate AAA, and that would mean that 1 ton claimed, we'd book into the balance sheet as 1 ton. But you'd maybe get some, let's call it natural-based carbon offsetting taking place in a country that is maybe not that well renowned for controls in terms of managing the quality. That asset we might rate a CCC or a C grade asset, and then when we book that in, we would risk discount it. So even though it claims to be a ton, we would buy the ton, but we would only book it in at 60% of that ton's value, so that we maintain a risk-adjusted buffer for when these events take place.
Yeah. Thank you, everyone.
Thank you very much, guys.